This image that you see in front of you is an image I posted on my Instagram in 2020. We're talking 4.5 years ago. And I ask a simple question by posting one single candle. What do you see? Now, most will see this as a simple hammer or a pin bar, but I don't care what anybody says. Every candle has a story, and this is why this lesson is relevant for you today. There's always going to be a beginning, middle, and end. And what I want to share with you on this lesson is that all that matters in your trading, if you want to simplify your process, is one single candle. Let's jump on the charts. Now, I want to make this very clear as we go through this lesson. I'm not undermining anybody's concept or process in the market. But what I want to share with you is my experience from going from a trader that was trading trend lines, support and resistance, breakouts, break and retest, and what have you. I've now simplified my process down to one key element. It is an undeniable fact and it is not up for debate. A candle will close bullish or bearish at some point today. And if you look at the charts, you can see everywhere, and I mean everywhere, that a candle at some point has to close bullish or bearish. Now, if that's true, and all we're looking for as a trader is commonalities where we see repeatable patterns in order for us to create a process that we can repeat consistently, then why don't we take advantage of that? We're looking at Aussie dollar USD. What can we see? Well, we can see a whole heap. We can see that price was trending to the upside. Price was failing to break the structural highs. Eventually, it broke its structural higher low, came back for a retest, and now we've continued bearish. And technically, you can say we're in a bearish trend. Do we need to do that? Not at all. If we're trying to simplify a process, what we can do is we can just simply zoom in and focus on one thing. And that one thing is this one candle right here. Why? Because every candle tells a story. There is a beginning, there is a middle, and there is an end. So what I'm going to share with you today is how we can trade this. If we isolate our structural high and our structural low, and we know that during this period, this candle was open for 4 hours, it's currently bearish, then we can take advantage of this. All we have to do is scale down. If we go to the hourly time frame, this is our high, this is our low. What can we see? Well, we can see here information that resembles that one 4H candle, and we can see three bearish 1 hour candles to the downside. So let's say we're trading a break and retest. Price has been trending to the downside. We can clearly see this, failing to break the highs, which is a good indication of that bearish sentiment in the market, that bearish pressure. Bulls are failing to take over. We have a break of this structural low here, so that's a breakout. We can see price is now retesting the structure. And however you want to trade this, let's say you're looking for a bearish momentum candle, you can look to take the trade with a stop loss above the high, and then you can look for your targets. If that's not how you trade, then we can remove this and we can continue to focus on the fact that, let's remove this also. We can also focus on the fact that this previous candle has closed bearish. So now we're moving on to the two candle theory concept. And because the 4H candle is currently bearish, we are anticipating a continuation of this move. We have a breakout trade here. So you can take a breakout trade. We have a break and retest trade here. So we can take a break and retest. Now we have a two candle theory trade where we have a 1 hour bearish candle in anticipation for the next candle to be bearish. So let's remove these. We've seen the breakout, we've seen the break and retest. Now we can focus on the two candle theory trade. The candle, the anatomy of the candle formation is wick first, body next. Once it flips bearish, we anticipate it to continue bearish. And then look here, we can take this trade also. Now, how complicated was that? All we focused on is the simple fact that the 4H candle is currently bearish. We anticipate it to close bearish. And now we're just using scaling down techniques to identify a pattern that correlates or has confluences that associates to our personal strategy, whether it's a breakout, a break and retest, or the two candle theory trade. Let's move down to, let's say, the 15-minute time frame. We're now isolating, or we've continued to isolate the structural high, and we've isolated the structural low of that 4H candle. So we're still focused on one 4H candle here. We can see price is currently in a downtrend. We're making lower lows and lower highs. We can all see that. Now we can say price is retesting structure. We can look for price to break out of that structure, have a strong bearish close below that structure, whatever it may be. I like breakout trades personally. So we have this trade here. Let's say I'm not a break and retest trader, or that's not a clear breakout for me and I want something clearer. So what we can do here, we can say, well, once price breaks below this level clear enough, then I will take the trade as a breakout. Here's your breakout trade. Whether you put it above the consolidation, within the consolidation, doesn't matter. We still have a great trading opportunity here. Another trade example. Let's say we're not a breakout trader and we're a two candle theory trader. We're waiting for price to break out. We're looking for clear evidence of price to create a top wick and flip bearish. Let's say in this instance it did because it looks like it did. And we take the trade, we put it above the previous candle here. And then what do we have? Let's say we didn't put it above the previous candle, we put it above this candle and oopsie daisy, we got stopped out. What happens? We have another bearish candle, two candle theory trade. And what can we look for here? Stop loss above the wick. Then we can look for our targets. Guys, how difficult is this? I mean, how much do I need to break this down for you? Nothing is complicated when you understand that a candle has to close bullish or bearish at some point today. That being said, our focus right now is one 4H candle. So we've looked at the hourly, we've looked at the 30-minute. Well, no, we haven't. We've looked at the 15-minute. What if we want to go down to the 5-minute? We'll take a look at this. Isn't it the same thing? All we have to do is look for supporting evidence that 4H candle being bearish will close bearish, and any pattern that resembles that directional bias we could take advantage of. So let's isolate this again. We have a consolidation. We finally have a breakout of that consolidation. And if we're looking for a breakout trade here, we can take the trade like so. Wherever you put your stop loss is not important. For me, guys, the execution is more important than your targets and whatever else, because at the end of the day, if you don't press the button, as I said in the past, you've got to execute, execute, execute. If you don't press the button, then you're not going to make money. Okay? So you have a breakout trade. If you wanted to, we can argue the fact that this looks like, if we take the low and the wick, this doesn't look like, this is what we call a break and retest. Is this not a tradable opportunity? What if we're looking for, let's say we're looking for a two candle theory trade. We're looking for a strong bearish candle close. I mean, on a 5-minute time frame, I wouldn't suggest it, but let's just say you was. And this is the high. We're going to avoid the consolidation here. This candle closes strong bearish eventually outside of the consolidation. So before anybody picks me up and says, oh, Rox, you're cheating, I'm not. I'm waiting for the consolidation for price to break out the consolidation. We have a nice bearish candle close here. We have a wick and flip. Now, I'm not going to exaggerate and say we're going to put our stop loss here because that's just not true. Let's just put it above here and call it 4 pips. What is that? It's not complicated, my friends. It's not complicated. And all we're doing here is just taking advantage of a single candles movement using scaling down techniques. And all you have to do is have one belief system when you show up to the charts, that a candle has to close bullish or bearish at some point today. How you associate that to your strategy, to your process, to your trading plan is entirely down to you. I'm not saying any strategy is the holy grail, but what I'm saying is if you have a streamlined process that you 100% believe in it and have zero doubt about, there is no reason why you cannot be a profitable trader in 2025. One single candle, that is all you need. That's the lesson. Okay? That's the lesson. Until the next video, as I always say, continue to trust the process.